Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're discussing something which many people have asked me about, and that is specifically in relation to high tide, and it's the bear case. Now before people panic and think I've turned bearish on high tide, I've not, but any good investor before making any investment has to fully understand what the downside case may be, what the doomsday scenario could look like, and so like I do with every investment I make, I consider that fully. If as an investor you don't give this due consideration and determine what you think those different situations are and the likelihood of them, then you're verging more on the realms of gambling rather than investing. In this video I'll go through the various key risks and downside cases that could arise, and as part of that I will also share my mitigants and thoughts against these risks and how I got comfortable that I don't think that they're going to be a problem during our investment period. Now this list is not exhausted, I don't have a crystal ball, and these are just my opinions and views. I may well have missed out some important things, so if I have, please get involved in the comment section below. Before we get into the video, please smash the like button. It's so helpful in our battle against clickbait content on investing YouTube, and it's really helpful in letting the algorithm know it doesn't only need to push clickbaity content. It's also really helpful for the channel, and so it's massively appreciated. If you're new to the channel, then make sure to subscribe, and if you want to see more content, then check out the Patreon group. As always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So for me, there are 7 key risks that high tide faces that form part of the potential bear case. We'll address each one of these in turn during the course of this video. However, they are regulation, dilution, increased competition, COVID-19, failure of the M&A strategy, broader sector sentiment, and Amazon taking the online market. Now as I said, we'll go through these one by one, but let's start with regulation. Now clearly the cannabis market is one which is highly regulated, and the regulatory landscape is different in each country around the world. There are 3 main regulatory opportunities or risks which high tide faces. The first of these is regulation in Canada. This is the only market where high tide is currently selling cannabis products through its retail store portfolio and also its online presence. The most adverse impact for high tide would be a change in the regulatory status of cannabis in Canada. Say cannabis took a U-turn on cannabis and it was reverted to being an illegal product. This would be a big problem for high tide, impacting the sales of the retail stores quite significantly. Of course they would still be able to sell consumption accessories, but it undeniably would impact the business model significantly. Personally, I believe this is highly unlikely. There's no rhetoric in the market currently to suggest this is even being considered, and additionally, tax revenues generated from cannabis sales are well received, and given the current financial position of governments globally, as a result of spending in the response to the pandemic, the elimination of an existing tax income is really unlikely. The other 2 areas of regulation to consider are the US market and other markets globally, but especially Europe. Now let's look at the US market first. Clearly this is a big factor which is driving sentiment in the market, but we will come back to that. Federal legalization of cannabis represents a once-in-a-generational opportunity for all sector investors, and the opportunity, if it happens, will create significant wealth for all of those currently invested in the sector. Clearly, high tide would benefit enormously from any such legalization in the US. However, the delivery of their existing plan and strategy does not require any federal legalization of cannabis. So on an intrinsic valuation basis, that being the valuation of a stock on the basis of the cash flows it generates, also known as the discounted cash flow analysis, the methodology used by all analysts in developing their price targets for a stock, nothing changes under that scenario. So as such, the US legalization status or the ongoing debate about it should not impact the valuation of high tide at all, and instead just acts as an upside only. Yes, there's obviously the whole debate around the impact this has on sentiment and the knock-on impact that has on valuation, but we will come back to that. European legislation is very similar to the US argument. However, it represents very little downside to anything, as this is not something which is currently at the forefront of potential drivers of valuation, and it represents solely upside as and when this also happens. In summary, while regulation is a real risk and is something which investors need to consider, over the time period which I'm investing into high tide for, I'm not overly concerned by this dynamic, and there's also still significant headroom for high tide to grow within its existing markets before it needs other markets to legalise cannabis consumption for it to expand there. The second risk that we need to discuss that forms part of the bear case is that of dilution. Now dilution has not been something that you've been able to escape concerned about on message boards and anywhere online in relation to high tide, but this is important to consider. It's not unique to high tide, instead it's a function of it being a fast growing company with capital requirements, and so it's something which many earlier growth stage companies face too. High tide has been financed historically with convertible debt and currently has a shelf offering of $100 million to help it finance further acquisitions. As with any company with dilutive instruments in the capital structure, there is the concern that this could be destructive for shareholder value and be truly dilutive. While this is a risk for high tide, for me the mitigants here are fairly robust. Firstly, the company has eliminated its convertible debt, which is being replaced by traditional bank financing, and this helps it further reduce that risk of further dilution. Additionally, to date, and especially recently, the proceeds of these dilutive instruments have been used to make acquisitions, which, as we've covered countless times on this channel, have all been accretive. In other words, they all create shareholder value. That's good news. If the company continues along this strategy, then investors do not need to worry about the risk of dilution at all, as each time they do a deal, like they have been doing recently, they're creating significant shareholder value. One final reminder here is that Raj Grover, the CEO, is the largest shareholder in High Tide, and to date he's never sold a share. This means that dilution impacts him more than it does anyone else. So as an investor, you either have to believe that as the CEO he is acting in the best interest of shareholders, and if you don't believe this, then you must instead believe he's acting in his own best interests, which again is nicely aligned to investors. That is, creating shareholder value, not destroying it with dilution. As the company grows, the risk of dilution becoming a genuine part of the base case decreases and it becomes increasingly less likely. Now the next risk to discuss and part of the bear case is a very valid consideration, and it's something which analyst coverage has been very focused on, and that is the risk posed by competition. Now there's no getting around the fact that there are many players in the cannabis sector and many of them are generating good margins. In any market where companies are earning high margins like this, it will attract new competition to enter the market to try and capture some of this profitability. The cannabis market in Canada is already extremely competitive, with many players all operating within very close proximity, and differentiation is essential to generate resilient, consistent margins. High Tide is differentiated from competition through its e-commerce footprint and also through its strong physical retail scale versus competition. As the company's grown recently, it's enabled it to secure preferential and premium retail locations through the relationships which it has with commercial real estate providers in Canada. These stores are located in areas with greater footfall, are more of a destination location, and will enable the company to generate superior and sustainable margins versus its competition, who are not able to secure such attractive locations. Competition is also somewhat limited by the necessity for licenses to open up stores, and so this will limit the ability for competition to continue entering the market. Competition is clearly a tangible risk for High Tide, but I believe that its differentiators position it suitably as a market leader, and therefore that the company is capable of effectively defending its market share and strong margin profile. So no recent analysis would be complete without considering the risk of COVID-19. High Tide to date has been impacted predominantly in its physical retail presence in Canada from the pandemic as a result of a series of local lockdowns. Nobody is able to predict what the future holds in this regard, but the company has effectively positioned itself to operate effectively alongside these challenges, and the results have not been too adversely affected. It could be expected that future lockdowns or restrictions would have a limited impact too, as the company's developed a best practice to deal with such circumstances. The wholesale business was marginally impacted as a result of disruption caused to global supply chains, but the overall e-commerce business proved robust. In summary, whilst it's impossible to predict how the COVID pandemic will continue, and so it's not unfair to assume that future restrictions should have less of an impact than they have done historically. Now the next really important thing to discuss is the potential risk and the component of the bear case being the failure of the M&A strategy. We've actually discussed this loads on the channel before, but clearly there are two essential components to a successful acquisition-led growth strategy: the acquisition itself and then the integration. A failure on either part of this can lead to the strategy derailing, and it can also be very destructive to shareholder value. Now, we can't forecast the future M&A, but we can look at the history of deals which High Tide has done and get a feel for this. Without wanting to repeat myself on every other video on High Tide's M&A strategy, we know that they're very conservative with the approach to their purchase price. They pay low multiples for companies with good strategic fit and where strong synergies can be generated. If future M&A follows this same level of discipline, then I'm confident that the likelihood of this risk is fairly limited. Integration is also essential though. Any company can acquire a load of companies, even those which are acquired at good valuations and which are accretive for shareholder value. But the integration of these, the realisation of synergies, and the effective management of these acquired companies is also essential. While it is very early days for High Tide still in this regard, the early signs that the company is effectively managing its integration successfully. Time, and especially more earnings releases, will give us more insight in this regard. But what we know from the earnings release so far is that the acquisitions they're currently integrating are going well, and they're on track to deliver the anticipated synergies with good progress already made against this. So this is something that as investors we should keep a close eye on, but so far I'm confident in management's ability to successfully deliver this M&A strategy and mitigating this potential risk. Now the next really important component of the bear case is that of sector sentiment. This is not High Tide specific, And as a result of this, the control of this dynamic is somewhat out of high tide's hands. However, it does play an important role in the bear case overall. As we've said many times before, sector sentiment is transient. In other words, it's not permanent, it's temporary and it changes. I will go into more detail on this on a separate video entirely, proving this with more examples, but the broader sentiment for the cannabis sector does have an impact on high tide's valuation. Ultimately, there's nothing that we can do as investors to control or to mitigate this risk. It really just comes down to patience and waiting it out. As I said many times before, this is a long-term investment for me, and while sector sentiment may be lower than it has been historically, this is not something that was permanent. At this point, it's also worth touching on the fact that clearly the US and the federal legalisation debate is a big driver for sector sentiment too. Until this is concluded, it will continue to impact sector sentiment. As long as High Tide is delivering its strategy, when sector sentiment improves, High Tide will be a beneficiary of this. As personally, I'm not considering an exit in any near time period. I'm happy to continue seeing the company deliver on its strategy, post strong growth, and continue to capture market share and position itself as a differentiated leader in the market. Now, the final consideration as part of the bear case which we need to consider here and we need to discuss, that is the risk posed by one specific player to High Tide's business, and that player is Amazon. Now, many are concerned that Amazon will enter the market, provided that cannabis receives the federal legalisation in the US, and will capture lots of market share. Now, we have discussed this at length in a video on this channel before, so I don't want to go over all of that again, but in summary, if they did decide to enter the market, they would not do it until sometime after legalisation status had been confirmed, and by this point, other players may have already started making inroads there already. Clearly, Amazon's scale means that they are able to capture market share from anyone if they wish. However, the next important dynamic here is that actually around 56% of sales on Amazon during Q2 of 2021 were made by third-party sellers. Given High Tide's footprint and infrastructure, it's well positioned to capitalise on this market opportunity effectively. Now, the next thing to keep in mind around this point is that of around perceived quality of products on Amazon. For high quality products or superior customer services, both things High Tide is known for, consumers are increasingly seeking alternatives to Amazon. So again, High Tide is really well positioned in this regard. To summarise on this point, I don't see this as an enormous risk for High Tide, as if the US does federally legalise cannabis, there'll be enough market for everyone to go for before needing to drive growth through capturing market share. Overall, there are clearly a number of material risks which High Tide faces, which form part of this bear case for the stock. As part of my analysis, I've appraised these relative risks and I've made a personal decision on the likelihood of these various risks materialising. I will share more detail on this and the impact which, when all of these are run through an investment case, this has on the valuation in my Seeking Alpha article, which should be uploaded fairly soon. So make sure you keep your eyes peeled for that. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, make sure you're subscribed and check out the Patreon group for the private Discord and live video calls. As always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.